Governments love to say they're working for your financial freedom. They talk about stability, growth, opportunity. But if you look at history, really look, you start to see something much darker. For centuries, governments have used the same financial tricks to keep ordinary people struggling while wealth and power rise to the top. These tricks aren't new. They're old, recycled, repackaged, and sold under nicer names. But the goal has always been the same: move wealth upward, keep the majority dependent. Let's start with the oldest trick in the book: inflation. When a government spends more than it earns, it has two choices: admit it and raise taxes, or quietly destroy the value of the money people already hold. Guess which option they usually choose? Ancient Rome perfected this. In the 3rd century, emperors running out of money simply reduced the silver in their coins. What used to be almost pure silver slowly turned into copper with a thin silver coating. The coin looked the same, but its value wasn't. Prices exploded, savings disappeared, wages couldn't keep up. It was a silent tax, the same one governments still use today, just with central banks instead of imperial mints. Then came the Middle Ages with a different trick: forced loans. Kings in England, France, Spain would ask wealthy merchants for loans. And no, it wasn't voluntary. Refuse, and you faced fines, or worse, repayments were late, reduced, or never came. The crown kept its lifestyle, merchants lost their wealth, all packaged as duty or loyalty. By the 1600s, the trick became the entire system. When Britain created the Bank of England in 1694, the goal wasn't public good, it was war money. Rich investors lent money to the government, and the government promised fixed interest, funded by taxes on everyday people: salt, beer, fabric, the essentials. So the wealthy earned safe returns and the poor paid for them. This structure still exists today. Fast forward to the modern world and the tricks just got more elegant. Governments run huge deficits. They say it's for infrastructure, jobs, the people. But billions flow into defense contractors, big corporations, bailouts. When the bill arrives, they don't cut from the top. They raise taxes, inflate the currency, or cut benefits. The debt looks like it helped the people, but the people are the ones who end up paying for it. Think about the 2008 crisis. Banks made reckless bets, nearly blew up the world economy, and who paid the price? Regular taxpayers, who got richer after the bailout. The same banks that caused the mess. Classic trick: privatize the profits, socialize the losses. Even retirement systems are built on illusions. People pay in for decades, trusting the money will be there, but in many countries, the government spends that money immediately and leaves IOUs behind. It works for years, until demographics change. Then the government reforms the system by cutting benefits, raising retirement ages, or inflating away the payouts. Notice the pattern: inflation becomes growth. Forced loans become patriotism. National debt becomes investment. Bailouts become stability. Cuts become reform. Different words, same result. Wealth moves up, pressure moves down. And in recent decades, the tricks only got more subtle. Take quantitative easing, a term nobody even knew before 2008. Central banks created trillions out of thin air to stabilize markets. Markets did stabilize, for wealthy investors. Stocks, real estate, and bonds soared, but the average person didn't benefit from any of that. They only got higher living costs and distorted markets. Then there's stealth taxation, the tax you never see but always feel. Sales taxes, fuel taxes, and the biggest one, inflation. When prices rise faster than your income, that gap is basically a hidden tax. Governments love inflation because it shrinks their debt, but it quietly shrinks your financial freedom too. And don't forget regulatory capture. When the companies being regulated end up influencing the regulators. Railroads in the 1800s, oil in the 1900s, tech and finance today. Governments look like they are protecting the public, but in the background, big players shape the rules to keep competition out and profits in. War finance? Same story. World War I, World War II, Iraq, Afghanistan, trillions borrowed. Who profits? Defense contractors and bondholders. Who pays? The public. Wars end, but the debt lasts generations. And one of the most effective tricks of all: complexity. Massive tax codes, confusing financial instruments, budgets buried in jargon. When something becomes too complex for the average person to understand, it becomes easy to hide what's really happening. Complexity becomes camouflage. Why does this matter now? Because the tricks didn't stop, they accelerated. Inflation eats your savings, debts grow non-stop, Bailouts remain the default solution, and the costs always fall on the same people: ordinary workers, families, savers. The painful truth: most people will never escape these tricks because they don't even realize they're being played. They think inflation is natural, taxes are unchangeable, and bailouts are kindness, but it's all part of the same cycle repeated for centuries. Knowing this doesn't make you paranoid, it makes you prepared. So here's what you should take away. Or always look past the headline and ask who benefits first. Or build real wealth, things that hold value even when currency doesn't. And never assume the system works for you just because it says it does. History doesn't repeat perfectly, but if you ignore it, it will absolutely run you over. If this gave you a new perspective, make sure to subscribe. History has answers, and I'll help you see them.